Hey there folks, sort of do an update on the trades I had running from yesterday and on the analysis overview, market overview, weekly overview that I did on Monday the 20th. I was looking for a press back up into this daily open on the US index, which we got here, pressed up into it and breakdown. Looking to retest this level down here, which we are currently still doing with gap down this morning. Slight little pullback up to fill that gap. I'm not sure, we'll have a look at it on the hourly, but it may have filled that up. And we're pressing down still. So rallied up. I was looking for the 96.20 to be hit. We hit it here. We pressed right through to 96.28, 28.7 or something. 29 might have been the high. 28.3 was the high on this platform, and then broke down late New York. Hit this median line, the center line of this blue line is the center line of a median line. We've smashed straight through that gap down. We may come back up later in London or something and retest that and break down. At an extreme, we might come right back up here and retest this level, but I wouldn't like to see that. I'd prefer just to see it run now. Once you sort of pass the halfway point, I prefer to see it make a run to retest these lows and these old highs, and then see whether we get a bounce out of that. Backing either back up into this level to then break down and consolidate over the rest of the month, or it'll bounce and go to new highs, or it'll, could reconsolidate back in this zone, could drop through it and then retest and go lower. So there's a few options. Obviously it's a bit ambiguous, but I don't generally try and predict more than a day or two ahead. Where's the market come from? Where's it going to? Where's it likely to bounce from next? Where is the liquidity at? There's liquidity below these lows to the downside. There's liquidity above these highs to the upside. So keep it as simple as possible, and try and use that information to grab a few daily sort of hourly swings or 4 hourly swings on the chart. I went a few trades on last night. I went long euro early in London off this bounce, and I just had my stops just a bit too aggressive. Stops were down here and they got tagged out. Now it did bounce initially. It could have trailed my stops up, I guess, and then it dropped down again, stopped me out on that, and I re-entered with half a position, so I lost 1% on the stop out. I went in there with half a percent. The reason I went in 0.5% was if it's going to keep dropping, I don't want to lose more than 1.5% on this overall setup. And if it does bounce from there, it would be very frustrating to get stopped out like that and then see this bounce and not get anything out of it. So that's 5-to-1 risk reward. And I took about 98 pips off that. Took 2.5% off 0.5% risk on the overall trade. Sure, it would have been nice to have gotten the full position size on down here, but you don't always get that, and that's one of my risk management rules to ensure that if I do get multiple losses on the same setup, then I'm not, if you're going in with 1%, if you go in, 1% risk or full risk, and you lose twice, and it's only a 2-to-1 risk reward. Sorry, 2-to-1 reward to risk, or 1 in 2 risk reward. And you take 2 losses on it, then you actually only sort of break even. So you do need to manage that. There's a couple of ways you can do it. You could double up on the second trade, but then if you do take 2 losses on the one trade, then I'd actually lose 3% on the one trade, and then next time around, if I get a 5% profit on a 5 times risk trade, then I'm actually only up sort of, 2% overall. So it's, how do you want to manage your risk, and this for me, I'm looking at trying to reduce my drawdown, so happy to risk overall 3% on the, 1.5% on the overall position, and in the end, with this running up, I've made come out 1.5% ahead on that position. Euro again, I went long here with the initial position in Asia, with a half a position size in here, half a percent risked, and it initially bounced and it's consolidated its way. The yen got strong, euro was a bit weak, and we've come down, we've opened the second half of a position which was off this level here, and I could have managed the euro trade similarly, actually. In hindsight, I could have entered half a position here and had half the position here with stops down here, and that would have actually enabled me to capture both, and perhaps I might look at that next time. I got a little bit close on this Euro USD trade. I was in here and looking for a bounce off this consolidation. It coupled with a standard Asian range. If you box out the Asian range and sort of copy that Asian range size down one deviation, then it lines up at this level quite nicely. So I'd gone long off that. I was looking for a strong bounce higher, and didn't get it. It came back down, stopped me out. I re-entered after we rejected this order block level, and pretty much just went straight from there. So Euro yen, I'm still in, and we've got a low here with a higher swing low, this low or this low, swing low to the left of it, and we could be making a higher swing low to the right of it now. So we could be getting another fractal low. We've got one here as a low with a higher low. There's a bigger fractal overall. If you want to zoom out, you've got a low, a higher low, and a higher low. So it's a bit of a head and shoulders, reverse head and shoulders forming here. And I think I'm still quite bullish. Euro yen, I'm still quite confident in this setup running up here to give me sort of nearly 200 pips out of that, if that runs. And if it doesn't, it comes down and stops me out here. It comes down and stops me out. That's what it does. So that one I'm going to hold on to. I'm still bullish. It's the fact that with the euro weak and the yen strong, it still didn't manage to break down through this consolidation area. It still only came down, bounced off what we've rejected. The euro is strong. All we need is a bit of weakness on the yen, and this will rip. Really good risk reward on that, so I'll hold on to that and see what we get. US yen, I took a short on that last night. To be clear, on the 4 hourly, we were rallying up as I was looking at last night, yesterday, back into this 4 hourly demand zone or order block for up candle prior to this breakdown. We came back up into it. I shorted it. The stop wasn't there. The stop was initially up here, and the target was just these lows. So quite a conservative target in hindsight. It's still dropping. I took about 60 pips out of it. 55 pips. I had about 25 pips of risk on it, so it was only a 2-to-1 reward to risk trade. Could have gunned for these lows. These lows, these double lows down here is ultimately what I think the target is for US yen myself. And it certainly looks like it's going to scream down and head for it now. It's given me a little bit of pain on the way down. I've scalped a couple of trades. I took a short here down to these lows, taken a short here to these lows. So I've grabbed a couple of shorts out of it on the way down. And certainly once this hits its target, I think that the yen may weaken off, and that will allow the euro yen to rip. Whether this hits it, might even just come down back into this sort of supply zone down here and bounce off that. So it's been really choppy on its way down, deep pullbacks. It might even just reverse more quickly and get it. So I grabbed a short out of that last night. That was only only risked 0.5% on that and made 1.5% on that. And part of the reason I went so low risk was because I had quite a few trades on. I had a short on the I had a long on the pound yen. Similar to the euro yen setup, we've got a low here, sort of reverse head and shoulders. This hasn't broken higher as nicely. We may come back down on bounce off this 140.50 level. I still do expect a rip on it, so I'd gone short here. Got an initial nice move higher here last night, and I thought it was off to the races on some cable strength, and I could have trailed the stops up to break even there, and possibly in hindsight maybe I should have. It came down within one the next hour and just swallowed that all up and has bounced around and come back down and stopped me out. I wasn't willing to drop stops down to here or anything like that unless I was going to reduce the risk on the trade, so that was my 1% risk. That's what I took, taking a hit on that. If it comes back down here and then bounces and sets up, we've got a large consolidation area in here. We should retest those levels, and I'll look for a long off that, potentially back up to these areas here. It's about 150 pips of upside on this. So if it is going to rip higher, there's still plenty of opportunity to potentially get in on it. If I don't get in on it and I only get the euro yen rip, then I'm happy with that as well. It's still a good outcome. There's nothing wrong at all. I took a long on the cable, the pound USD. It was dropping nicely into these old highs. Down movement here prior to the upswing is actually what I was buying off. You've got these old daily high, these old sort of daily high from back here, session highs here. We've run through it, dropped. We've been creating higher highs all the way up. So I took a long there. Stops were fairly tight down here, and I'm looking for 100 pips to the upside to run this high. And certainly at the moment we're just screaming straight up there. Now when we rip like this in Asia, it doesn't always continue through into the main session of the day. So depending on how high this gets in Asia, I will be monitoring it and looking to take profits off potentially. If this just runs this high and doesn't really want to get up to this level, I'll be taking something off this early. You can see now we're really starting to rip. US index is kind of dropping down quite solidly. We've possibly got some news coming in here. So we'll look to manage, running back up into this level that we rejected from previously. I still see 28.50 as the upside target, and my targets are quite conservative from the point of view of looking at 28.50 being the upside. And have a look at how long this has gone for. 13 minutes. It's nearly long enough, really. So I've got upside on the cable. I'm looking at trying to possibly nail 100 pips off this. I'll certainly get a decent chunk of this. Even if it pulls back a bit here, I'll possibly pull out of it. I'll look at monitoring this, and I'll update you with how we go on those trades, perhaps towards the end of the week. See if we can get a rip on the euro yen. It's just broken to the upside nicely. Pound yen hasn't, so it's still weak. US yen I probably should have held on to. It's crashing lower still, but I've got a portion of it. You've got to be happy with that. And this one here, we'll see how we end on this hourly candle. If this hourly candle can't end nice and strong, then we'll pull it. Euro, maybe I got out too early. It's ripped. So I looked for the euro yen. I don't want to see it reject these highs. We've run these highs. I want to see it close above these highs if it can. I'll allow it to come back and retest this level. I don't want to see too much rejection on this though. Plenty of time left in the hourly candle yet. They often pull back and then continue ripping higher. So we're only 10:35. I'm going to leave the video there. That is how I used the USDX analysis looking for lower prices on the daily to retest these old highs, which we've just come down and triggered into, interestingly. Big move in Asia. I'll possibly look at pulling the cable trade off. I've got some nice profits on that. And yeah, that's how I use the analysis on the USTX going into the week to trade a number of pairs. I've picked up about, with the cable trade, I'll be up about 10% or close to it. I'll be close to 10% up by Tuesday London going into this week. Quite busy with other things for the rest of the week, so I may not get much other trading on, but that's still a nice amount for the week for me. And I'll possibly be leaving it there. Hopefully that gives you some insight into how you can use your daily analysis on the US index to find some other nice trades in the markets. And good luck and good trading with whatever you're working on.